Hello, today we're going to talk about the daily triangle breakout and how to trade it. Now, the triangle is a continuation pattern, and if you see it in a stock and index, it is most likely midway through the move, and it can be extremely useful to catch a stock that is going to break out even higher. So without further ado, let's go to the chart. Now, the triangle looks exactly just like a triangle because when you connect the highs, you form a downtrend line. When you connect the lows, it forms an uptrend line. So the number one thing you need to do is to draw two trend lines connecting the lows and the highs. This is a triangle. And if you see this pattern, by the breakout, you can put a stop loss at the most recent swing lows, or you can put a stop loss at the entire pattern itself. So it's a very simple trade setup. Okay, the important thing is not to find textbook kind of triangle, but try to look for triangles that may not be perfect, but they do look like a triangle. When you combine the two lines, eventually you'll meet at an apex, and that will be a triangle. So you buy the breakout, put a stop loss, and then you ride the stock higher using the 20 MA. So if the stock drops definitely below the 20 MA, like here, you want to sell half of your position, or maybe a third, and you ride the others higher. Now, the moment it kind of gives you a very good return, you might want to raise your stop loss to break even. Let's say this is your buy point. If the index or stock goes up to here, you might want to raise your stop loss to break even, and that's how you get a free trade. So this is a daily chart of Nikkei 225 futures. Okay, it produces a very nice triangle. And here are some additional bonus things. First of all, there should be a previous move up. You can see the stock kind of form a double bottom. Here it rose up higher, and then it traded sideways to form a triangle pattern. So this is a previous move up, and this is actually a continuation pattern. Now the second additional bonus is the stock should be above the rising 50 MA and 200 MA. So here, as the triangle forms, the 50 MA was already rising, and the 200 MA is this yellow line, which is already rising. Now the key thing is to find the rising 50 MA and 200 MA, because when the 50 MA is rising, it tells us that mid-term the stock is bullish, and a rising 200 MA tells us that the stock is bullish in the long term. So you want things to be bullish in the mid-term and in the long term. And if during the breakout the stock is above the rising 20 MA, it's very good because it tells us that the index of stock is bullish in the short term. And as you can see, during this breakout time, the index was above the rising 20 MA, 50 MA, and 200 MA, and that's why it had a very nice up to 40,000. So the other thing you might want to take note is, as the pattern is forming, you want to see a declining volume. Here we kind of see volume declining, although this is an index. Maybe the accurate volume is not accurate, but if it's a stock, definitely you want to see a declining volume to tell us that players are not selling the stock, but rather staying put. And when it breaks out, you want to see higher volume as it breaks out. Okay. Although when you are buying it, you are part of the action. Okay. Now it's also important for us to study the chart as it breaks out, not the final result. This is what it looks like when the index is breaking out higher. So you connect as many lows and highs and buy it as it breaks out. Put a stop loss here if you're aggressive, or if you're less aggressive, put a stop loss here. And here the rising 200 MA point to long-term gains. So I hope this lesson on how to trade the triangle is helpful to you. Okay, hope you have learned something of value, and do try out this trading strategy, paper trade it, and see whether it works for you or not. So if you like this video, this lesson, please give me a thumbs up, like the video, and share it, and subscribe to my channel for more trading strategies like this, and I'll see you in the next one.